If you've been holding XRP through the last few weeks, I want you to look at one number before you do anything else today: $1.15. That's the level a specific chart pattern is now pointing to, and if you stick with me for the next few minutes, I'll show you exactly why that number matters, what has to happen first, and where this whole setup could fall apart. This is XRP Future Finance, and today we're breaking down a recovery story that's quietly building steam while most people are still focused on the June crash. Let's get into it. June was rough. There's no way around that. XRP fell more than 22% and briefly touched the $1 mark, a level that made a lot of holders nervous. But something changed after that low. Instead of continuing to fall, the price found a floor and started building sideways instead of down. That's the detail most headlines skipped over, and it's actually the more important one. A stabilization phase after a sharp drop is often the first sign that sellers are running out of ammunition, and that's exactly what set up the pattern we're about to walk through. On the 4-hour chart, XRP has been carving out what traders call a rounded bottom. Instead of a sharp V-shaped bounce, the price has been curving upward slowly, like a bowl. This shape forms when selling pressure fades gradually, and buyers start entering at slightly higher prices each time, rather than all at once. It's not a flashy pattern, but it's one of the more reliable signs that a downtrend is losing its grip, especially when it shows up after a decline as steep as the one XRP just went through. Here's a stat worth sitting with. XRP defended the $1.01 to $1.06 zone multiple separate times in late June, even while the rest of the crypto market was shaky. That repetition matters. One bounce off a support level could be luck. 4 or 5 bounces off the same zone usually means real buyers are parked there, absorbing every dip. Since then, XRP has reclaimed its 20-period moving average and is now pressing against the 50-period average near $1.07, which tells us short-term momentum has actually flipped in favor of buyers for the first time in weeks. Now for the momentum data, because this is where it gets interesting. The relative strength index has climbed to around 64, showing buying pressure is building without tipping into overbought territory. Pair that with rising trading volume during this bounce, and you get a combination that technical traders specifically look for: price going up, momentum going up, and volume going up together. When only one or two of those move at the same time, a rally is usually shaky. When all three move together, it's a stronger signal that the demand behind the move is real, not just thin, low-volume noise. So what's the actual number to watch next? $1.10. That's the resistance ceiling that's capped every recent bounce attempt. A confirmed 4-hour close above it would validate the rounded bottom breakout, and from there, the next realistic target lines up with the 200-period moving average sitting between $1.14 and $1.15. That's not a random round number pulled from nowhere. It's a level that lines up directly with technical resistance, which is exactly why that price target keeps showing up across trader forecasts right now. But here's the part I don't want you to skip past. This setup is still fragile. If XRP loses the $1.07 support, the breakout attempt fails, and price likely slides back toward $1.04, the same zone that formed the base of this entire pattern. Chart patterns aren't guarantees, they're probabilities. This one has decent odds behind it based on the volume and momentum data, but it still needs confirmation, and until XRP actually closes above $1.10, everything we've discussed so far is a setup, not a done deal. Let's talk about who's actually buying, because this part rarely gets enough attention. XRP ETFs have now posted 8 straight weeks of net inflows, totaling close to $1.47 billion. What makes that notable is the timing. Institutions kept buying even during the worst weeks of the June sell-off. That's not typical retail panic buying behavior. That's the kind of steady accumulation you usually see from investors who are looking past the next few weeks and positioning for a longer stretch ahead. To be clear, this ETF money alone hasn't been enough to flip the broader trend on its own. It's not a silver bullet, but it has acted as a floor underneath the price during some genuinely volatile stretches, and that steady demand is one of the reasons XRP stabilized instead of continuing to break down. When you layer that institutional buying on top of the technical pattern we already covered, the case for a real recovery starts looking less like speculation and more like multiple signals pointing the same direction at once. Here's another data point worth paying attention to. Exchange outflows nearly tripled in the last week of June, jumping from around 41 million XRP to more than 120 million XRP leaving exchanges. When coins move off exchanges in that volume, it usually means holders are moving them into private wallets for long-term storage, not lining them up to sell. That behavior pattern is a classic accumulation signal, and seeing it spike right as the price was bottoming out adds real weight to the idea that smart money was buying the dip while headlines were still calling it a crash. There's one more data point worth mentioning. XRP's weekly RSI dropped into oversold territory not seen since 2022. Now, oversold doesn't automatically mean buy now, and it's possible for an asset to stay oversold longer than expected. But historically, similar weekly RSI readings on XRP have preceded multi-week recovery phases more often than not. It's not a perfect signal on its own, but stacked next to the ETF inflows and the exchange outflow data, it adds another layer to a picture that's starting to look less like a coincidence and more like a pattern. Zooming out to the bigger picture, the macro backdrop is actually helping XRP right now too. Growing expectations that the Federal Reserve could cut interest rates have eased pressure on both the dollar and Treasury yields. Lower yields make safer assets like bonds less appealing, which tends to push investors toward riskier plays, and crypto usually benefits from that shift. This kind of macro tailwind won't cause a rally by itself, but when it lines up with a bullish technical setup like the one XRP is showing, it tends to make any upward move a little easier to sustain. There's also a seasonal angle worth a quick mention. Looking back at historical data, July has actually been XRP's strongest month on average, with returns just over 10% historically. That doesn't mean this July will repeat that pattern, and nobody should trade purely off a calendar. But when seasonality, technical structure, and institutional demand all happen to line up in the same direction at the same time, it's at least worth having on your radar as one more piece of the puzzle. Now let's be fair and talk about what could go wrong, because a balanced take matters more than a hype reel. XRP is still trading well below its longer-term resistance levels from earlier in the year, so even a successful breakout here doesn't erase months of prior weakness. There's also regulatory noise to watch, specifically around California's digital financial assets law and how it could affect Ripple's RLUSD stablecoin operations. Headlines like that can shift sentiment fast, sometimes within hours, and they're the kind of wild card that no chart pattern can predict or protect against. So here's where things stand. If XRP clears $1.10 with real volume behind it, the path toward $1.14 to $1.15 opens up fairly quickly based on the current structure. If it can't hold above $1.07, the more likely outcome is a retest of the $1.04 to $1.02 zone, and traders will be watching that area closely for the next sign of buyers stepping back in. Either way, the next few sessions are going to tell us a lot more than the last few weeks did. That's the full breakdown for today. None of this is financial advice, just a look at what the charts, the ETF flows, and the on-chain data are actually showing right now. If this kind of breakdown is useful to you, let me know in the comments where you think XRP goes from here, and subscribe if you want to catch the next update the moment this $1.10 level gets tested. See you in the next one.